to save the show right now. We can do that with Afsaneh Beschloss. This is a high point always for John and myself at Davos. There was no Davos this year, so we talked to her with her acute knowledge of the hydrocarbon business, her Iran, and also the times that we live in. Afsaneh, what I see in the research is a split between a Western developed world in recovery and everybody else not. Synthesize that for Rockcreek. Are we really detached, developed world and everybody else, or are we all in this economic growth together?
Whether we move out of this inequality that you were just talking about, and which Jerome Powell and the rest of the Fed is for the first time in a long time, facing down. The Fed's job has always been to deal with monetary policy, but we're hearing more and more dealing with income inequality. And that takes me to your question, which is U.S., Europe versus emerging markets. And I think the tale of two cities has become much more complicated. In emerging, depending on what kind of sectors are growing, whether they have a vibrant technology sector, whether they are dealing with semiconductors like Taiwan and Korea versus, making leapfrogs in terms of getting their health sector ahead, will be in very different situations as compared to those who have not. Obviously, the big question that affects both developed and emerging markets, Tom, is how COVID vaccines are getting distributed. In the US, of course, we are moving very fast from thinking that we're all working from home to maybe as soon as June, July, having the option to go back to offices, schools reopening, colleges, letting everybody come in at the same time. That's a very big deviation from Europe, which has been behind on its purchase of vaccines, and then emerging markets that either cannot afford to or cannot get the supply of vaccines. So that is a tale of two cities.
Afsaneh, there's also this concern that as Treasury yields rise, as the United States provides higher rates to investors, that will suck money away from some of the developing world at the same time that they struggle to catch up with the rest of the acceleration due to a slower implementation of vaccines. How, as an investor, do you invest around this? I mean, how much are you factoring this into your allocations?
I think you just have to look at it much more actively, Lisa. I think you can't just sort of do the index thing that has been going on for the last 10 years. You can't bundle sectors together, you can't bundle stocks together, you can't bundle countries together. And so it becomes will be the impact of the innovations and the very rapidly changing lifestyles across all income segments and all countries. The way technology has entered our lives and is also entering the lives in emerging markets the same way, in health and education, and then with renewable energy, of course, which we have talked about before, with the current oil prices encouraging more investment in renewable energy, apart from all the government programs and the fiscal stimulus that is coming in and potential changes in regulation. I think all of that will be really good, not just in terms of climate change, but in terms of bringing growth levels much higher across the globe, emerging and developed countries.
How active are you right now in deploying cash? Are you taking a step back, thinking that perhaps some of the rapid gains are in and waiting to see how things establish themselves when it comes to fiscal stimulus?
I think you want to not have too much cash, and you want to be well diversified. And so we probably, at the cash levels, we always keep 2-3% cash in case of specific opportunities that are coming up, but really not much more than that. And we are very still excited about equities. In the U.S. and Europe, you've seen the run-up in equities, and in certain parts of the emerging markets, in the financial sector, in the health sector, we've had a lot of really interesting opportunities across emerging markets, really both Asia and non-Asia. Taiwan, I just mentioned, obviously continues to be an exciting place, not just because that we're probably at the lowest end of our allocations to bonds, except, staying at the shorter end of the curve. Last but not least, I think the big question for a lot of investment portfolios is how much you continue to invest in privates versus liquid assets, because a lot of the innovations that we're looking at need you to lock up, if you're investing in early stage or growth stage companies for longer term. And that's an area where we've been doing more and more, really, and continue to as we speak.
Afsaneh, always love listening to you. It's great to catch up. Thanks for giving us your time. Afsaneh Beschloss there, the Rockcreek Group founder and CEO.